Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Friday, May the 14th, 2010, and we are making some coin because we're on the right side of the trade. Let's look at the chart. This is the Dow Jones Industrial Average 6-month chart, each one of these candlesticks being 1 day. If today's sell pressure bothered you any, if it cost you money, and you're thinking to yourself, I hope it rallies on Monday, think again, baby. See this right here? Yeah, that's not a hammer. That's a hammer. You want to see a hammer that tells you, okay, the selling's probably subsided. That's a support signal. You don't have that there, baby. No, she's got to go lower to fill the gaps, okay? And the overall markets are rolling over anyway. You've got all the signals in the world out there, but I'll point out a few. You keep watching these videos every night, okay? All right, so we want to stay short this market, look for more opportunities to be doing that. You could see a little more bouncing around if news comes out over the weekend, something like that, but the end result will be a move lower. And I want to point out some major indications that the overall world economies are going back into recession and the market's picking up on it. But if you don't know the technicals, you don't know how to spot it. So we're going to look at those today, okay? First off, this last sell point we had right here, she sold off, big old sell off, and then bounced right up here. Note this dotted line right here, this middle Bollinger Band line. We went right through it like it was made of paper, okay? Right through there. This time we sold off, we bounced up here, and all of a sudden the middle Bollinger Band line is acting as resistance. That happens in a bear market. That's what has just shifted. We've just seen the change from bull market to bear market. We told you back when this big sell day happened here, we told you that was the peak. And we got lucky and we're right. But once we saw these three candlestick formation right there, we knew we were right. Down she was. Okay, then we got this big bounce up because of the bailout, $1 trillion bailout to Europe, European Union. We told you it wasn't sustainable. The bounce was not sustainable. You had to short that. She has a major gap to fill on the S&P and then on the Nasdaq. She has one here too, but it's bigger on the other charts. But anyway, so down she's been going. So we've been calling this dead on right, making money hand over fist because we're on the right side of the trade. And this is going to get worse. Let's look at the oil chart and then the gold chart. Okay, this is a chart, a 4-year chart of gold. Each one of these candlesticks being 1 week. You'll notice we broke out to a new high here with a continuation signal on that week's candlestick. Very bullish signal there. You are getting a little toppy. You're at 70, 66. Anything over 70 is starting to get into overbought conditions. So you could see that as being a peaking signal. But the reason why we got into this trade back here was because of the credit and the currency issues that we're having around the world. That basically is making everybody question the solvency of these nations and of these fiat currencies, and so they're flocking to gold. That's putting a floor in gold, and it's driving prices higher. So that could actually start to ignore technicals just based on fear. Okay, you could get euphoria going on, kind of thing. So keep an eye on that. But the main thing to take away from that is that there is a great deal of fear, okay, around the markets right there. And of course, if there's a great deal of fear, then it's kind of hard to say it's a bull market. Everybody wants to own stock. Obviously, they don't. Okay, let's look at oil. This is a big bad chart of oil. Okay, some main things to take away from here. Let me get the right tools out. Okay, previous support right here. Okay, she worked her way up here. Support, big move higher. This is previous support, now acting as resistance. Note this previous support right here, trending higher, broke down right there. And now, instead of just bouncing around and coming back up to it, she's finding resistance there. That's why you're getting this sell on this week and you're getting that inverted hammer. She's going lower, plain and simple. Why would oil go lower if the economies, if the world economies are believing that they're coming out of a recession? They don't. They believe they're going back into recession, and that's why it's being reflected in oil, it's being reflected in gold, it's being reflected on your charts. It's definitely not a bullish place to be going long, okay? That's the analysis for today. Every night we provide one of these technical analysis. We look at different charts, so we give you, opportunities. If you are looking for a long or a short, we show you some signals on different charts every single night, and it's really all free, 100% free. You can go to our website at perfectstockalert.com and use it all day long. You can see what's in my portfolio. You can even get alerts on any activity in my portfolio All we ask is that you refer a friend. Just tell somebody, anybody, go check out perfectstockalert.com. That guy is awesomely accurate, okay? And it's free. So, you can't beat that with a stick. All right. Let's have a look at the disclaimer. The disclaimer. Dun dun dun. The information provided herein is our opinion only. We can say whatever we like, and we're not liable, okay? Read it and weep. So, if you have not yet subscribed to our YouTube channel and you're watching this on YouTube, man, I will smack you. Push the button. Push it. Push it now. Subscribe. There you go. Thank you. All right. God bless. Enjoy the evening. Let's go make some money starting Monday.